Okay, hi everyone. It's Orderflows trade recap for September 1st, 2016. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, the tools that are used in this presentation is mainly the Orderflows Trader software, which is my main volume footprint chart. And it runs on the NinjaTrader trading platform. You can download NinjaTrader trading platform for free at www.ninjatrader.com. Okay, so I had one trade that I was able to get off during the room this morning, and it ended up being a scratch. It was in the money pretty quick, and then it sort of started going up against me. I just got out for a scratch and was looking for another opportunity later. It did appear, and I was just too slow, and I didn't get filled, and I missed it. But sort of coming into today, let me just sort of step it back a little bit. I mean, it's hard to see it now, but early in the session, you gotta use your imagination a little bit here. The volume profile, you had a value area here. You had the high at 4 in the morning, and on a normal chart, at the time, this was coming out to here. It's just because we put a lot of volume in later in the day. It looks smaller now, but coming into the U.S. session, you had an earlier value area high here, and then around 7, you started getting a lower value area, lower point of control. Your first point of control was up in here around the 76, and then later, after coming into the U.S. session, 7, 8 o'clock, you had a new lower point of control. So you had this one up here, then you put in a lower one, and then after cash open, you put in a lower one. So you had 3 lower points of controls forming early in the day. Right now it's hard to see that because this is the full day chart, and we put in a shitload more volume later in the day that makes those numbers look small. But so anyway, I had that in my mind that hey, we're putting in these lower points of controls on the volume profile, and when you're doing that, you're going to have a higher chance of going lower. Now the other thing was, let me pull up the 10 range chart, which is also important. Okay, this is the 10 range chart. Now this is August 31st, the day before, and I drew these lines in there. You can do that on NinjaTrader, F6, and you'll draw a horizontal line. And what it is, I drew this first line here at, I don't know what that is, 69.25. This was yesterday's point of control. This other line up here was yesterday's value area high, and I used this line at 62.75 as the value area low. Okay, so value area high, value area low, yesterday's point of control. Now, we were coming into the session at 8 in the morning, and we're just trading around. We're trading inside yesterday's value area, and we're hanging around yesterday's point of control. Now we started coming. What I'm looking for is if we can get below yesterday's point of control, I'm looking for a move down to the value area low, and if we get below that value area low, then I think it's going to be lights out. We're going to go lower. And so what happened was we started trading below. This is a 10 range chart. We started trading below the value area low, or sorry, the point of control. And go back to the 3 range chart real quick. What time was that? Just before 9. And I got short here. We started making new lows. And I was seeing we were getting sort of these waves of selling coming in. 850. Decent negative delta, 851, again, a negative delta every minute, 852, strong one, and, even 853. So I got short at 7.5. I thought, hey, this is the move. We're going to make the run for the value area low and hopefully take it out. And, I got short at 7.5. I had a bid in at 5. And what do you do? As luck would have it, is there luck in trading? I don't like to rely on luck, but to me, this is how I would describe luck in trading. When you got a bid in at 5, and as low as it gets is 5.25, 1 tick, from your take profit. You know, what can you do? You can't stare at the screen and make it go there. You know, lots of times, you know, people are like, come on, cheering for it. You know, the market can't hear you cheering, and you know, the market's not gonna react that way. You know, we started coming up. You know, even, you know, I really liked it because, you know, I had 3 in a row, had the delta surge kicking off. You know, I got this very strong negative delta, and then what happens? It just hits here, very small volume, although this is the price rejector giving a buy, and it did turn around. I ended up covering it at, you know, at a scratch. I scratched it at 7.5. Yeah, I don't know. People say, oh, you chickened out, you weren't willing to take heat. But, you know, really, I don't like to get short and have the market make a move, go back up to my entry price, and then expect it to make the move again. Usually, you know, you get short, it makes a move, okay, doesn't quite get there, and reverses, and it just keeps going up and up and up. It just happened, you know, so be it that it turned around. You know, I'm looking at some very nice buying imbalances here, 986, 500, 2000. You know, am I going to fight that? Or, you know, hey, I could cover it here at nothing. You know, I don't want to be covering it up here at 8.5 and losing a point on it. You know, I'm fine to take the scratch, you know, and look for the next trade. But you know what? And you know, we had a number coming out at 9 as well. So do I want to sit through the number? In this case, you know, the number helped the market sell off. But again, I'm not going to hold this position through a number. I mean, that's ridiculous. Only people that are looking to trade around numbers are I'll say the uninformed, but you know, said, look, I'm not an economist. I read the order flow. I want to react to it. And you know, when a number comes out, everything changes. So you know, having a view based on the order flow before a number, and then the number comes out and everything's going to change. You know, I don't want to still be in that position after the number comes out. I'd rather wait for the number to come out. You know, the market to settle down, and you know, everyone to take their views again on the market. And you can see is jumping around pretty quick. You know, 9 o'clock, 9 o'clock, 9 o'clock. You know, this is all within that 1 second. It's moving pretty fast. So you know, I scratched it. You know, but you know, people say, oh, yeah, if you stayed in it, yeah, you could have had a winner. Yeah, but I'm not going to sit through a number. You know, people that will try and talk you to sit through a number, you know, good on them. You know, let them, you know, trade their way. I'll trade my way. And you know, so that was, you know, that was the one trade. You know, the market did settle down a bit later. I did try to get short again here on this move here. This is 9, just after 9:10. You had ratio starting to come down, and I tried to get short at this point of control, 7.5, and I missed it. I couldn't. You know, by the time I was talking about something else, and by the time I tried to, you know, get my order in, I missed it. And you know, okay, I missed it, and that's fine. I mean, part of the reason I have the trading room is just so I could talk to other traders and get them, you know, teach them a bit on order flow, you know, and talk about what I'm seeing in the market, not just for me to trade. There's a lot of other times in the day to trade. And so, you know, I missed it. Okay, you know, I left my offer in. I saw this, you know, so imagine if I'm short here at 7. Sorry, this was 7 3/4, not 7.5. And there's a nice stack selling imbalance right there. Okay, and thinking, you know, now this, you know, we're going to go down into lows, make new lows. Oh, trading gods, you know, today's not my day. You know, I scratched the trade earlier and I missed this trade here. This looks nice. But then what happens? We have the stack selling imbalance, which to me is, you know, a bearish sign. And what do? We just go sideways. 1, 2, 3, 4 bars already. You know, when we're in this third bar, I canceled my offer. I don't want to still, you know, I don't want to still be trying to get short here at 7.5 when I have this very bearish signal here, and the market's not going lower. You know, what's going to happen? I think, you know, is, you know, if we get, you know, the further we get into this imbalance zone, that, you know, if we can't pull away, chances are we're going to go the other way. But once we get past, you know, this is 1, 2, 3, 4 bars. Once you get past the 5th bar, you know, this one, really, it's all bets are off. I mean, this thing, you know, the further out you get, the further away from it you get, the less importance it carries, I think. And, you know, so I canceled my offer. And what happens is you trade up to 8.5. Okay, you know, yeah, if I kept my offer in at, you know, 7 3/4, yeah, I would have been filled and, you know, taken, you know, what is that, 3 ticks of heat. You know, and it did go off and continue to make new lows. But, I mean, you know, you gotta be realistic in your trading. I'm getting, I wanted to get short off of this, okay? And then I get another bearish signal, I miss it, okay? So I got an offer in there, and then the market gives you another bearish signal, but doesn't go any lower. Do you still want to be short? No, I don't want to be. And so I canceled it, okay? Because the reason, I don't want to be short way over here based on, my analysis from, 5 minutes ago. I'd rather be short and catch a quick move rather than, wait for the market to come back, fill me, and hopefully it'll make that move. In today, today's examples where, yeah, if you waited, in this case, the market did come back. It made a little bit of a move, came back, and then made another move. Oftentimes it doesn't do that, so it's, am I willing to risk the times it does it for the times it doesn't, or risk the times it doesn't do it for the times that it does it? I'd just rather not take those trades. I'd rather not take those chances. I mean, it does it. Sometimes it doesn't. Sometimes, sometimes it'll work. Sometimes it wouldn't. That's not a very scientific thing. But, I mean, these were the two trades that, one I was able to get in, the other one I missed, and I just hung it up. Now, getting back to the 10 range chart, okay. Now, again, I have this line here. This is the lower end of the value area low, and that was at 2.25, and I really was waiting for it. Again, I was it's in the room. I was talking to somebody about something else, and we hit it, and wow, we just fell over really quick. I didn't have a chance to sell it. I was looking at the bonds at that time, but it was a very nice quick move. At 9:30, literally within a few minutes, we're trading about 4 points lower. And why is that important? Well, when you trade out, it was early in the day. It's only 9:30. You really haven't formed your value area yet for today. I mean, yeah, you got some decent volume. I think you got to remember, right? S&Ps trade about 30% of the volume up until cash open. So, the value area that you have from overnight is going to change really quick because you traded, less than a third of your day's volume over the last, I don't know what that is, 20 hours? Nah, say 20 hours, 16 hours. So, it's going to change once the cash opens and you get 3-4 times as much volume going through. So like I said, earlier you have these, value areas which look much bigger, but during the course of the day you're going to put in more volume and it's going to really expand. Earlier coming in at 7 o'clock, you're looking at 10,000, 8,000, 9,000, 10,000, and on the volume profile at when those are the big numbers, they really stick out like this. Now, at the end of the day, you had 50, 60, 70,000. It sticks out much more than these. But what's important is, the value area that you have earlier, is it important? Yes, it is. But really, yesterday's value area is also important. So we were trading inside yesterday's value area most of the morning, early part of the morning. So if you get outside that value area, what's going to happen? One, you can trade back into it, or two, you can move away from it. And it's when you start to move away from it, you can get the big moves. Our additional traders going to be coming. I mean, when I say additional traders, I mean more long-term money traders. People that are taking positions and holding them for weeks, as opposed to day traders or swing traders. New money, so to speak, new positions coming in. And how do you sort of see that? Well, you see that in the imbalances here. That's, to me, this is not day traders getting short. Day traders, when they see the value area low, they want to buy it and think we're going to trade back up into the value area for the day. But, once you start moving away from the value, okay, the market is done with that value area. Now it's going to look for another value area. That's what the markets do. They're always searching for value. They're always looking for the next value area. So now, this area between 63 and, 70 is yesterday's value area. Now it's going to be looking for, the next value area. And, it came in and, around between 9:50 and 10:30 or 11 o'clock, we spent a lot of time down here. These bars got a lot of volume. You got one bar here, 130 100,000, almost 140. You got a bar here, almost 100,000. It's at 94,000. This one here is 50,000. So, it found a new value area for the time being down here, and people were happy to trade. You got a bar with 50,000 contracts traded. It's only got a delta of 700. People are happy to trade here. There's only a difference between buyers and sellers of, 700 is not much. And that's right off the low. So, it found its new level down in here for the time being. Okay, it didn't want to continue any lower, and it traded back up into yesterday's value area, and that's where it, that's where it spent the rest of the day. So, it said it tried to find this new value area. It sort of found it, but maybe price was just too cheap down here that it traded back up in there. But markets always are searching for value areas. So if you're going to get that move outside the value area, it's important. Yesterday's value area. So anyway, guys, I'll end it today. I said, there was there's 3 trades. Again, I missed the one when we started breaking out the value area because I was chatting about the bonds at the time. But you know what? I wanted to include it on this video so you can see it and understand the importance of it. So, thanks for watching this video. To learn more about trading with Orderflow, the software that I created to help me analyze the order flow, visit my website, www.orderflows.com. So thanks everyone, and see you on the inside. Bye-bye.